on to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone, it's Phil Tarrant here. I'm the host of the Smart Property Investment Show. Thanks for joining us today. Hope you're enjoying your summer break or some reflection over the period between Christmas, New Year's and up into Australia Day. It's a time to recharge, readjust, reflect on a year past and look at what you might be able to do with property in the years ahead, amongst many other things. I've got two people in the studio today. I've invited them back on the show reluctantly, but I've been copying a lot of badgering. For some reason, our listeners listen to these two people. So I've got them back in to help me have a chat about the market, just a bit of a chin wag on what's been going on in property and finance spaces. Colleagues, friends of mine, Aleks Vickovich and James Mitchell. Alex is our managing editor here at Momentum Media of all our wealth platforms, and James is the managing editor of Mortgages. Guys, how you going?
Very good, thanks, Phil.
Well, thanks. Thank you for the reluctant invitation, Phil.
Yeah.
It is a reluctant invitation, as you can see. Before we come on air, just for our listeners, there's a reasonable amount of banter, all in good jest, but we've got two guys in the studios here who are in an enviable position in what they do every single day, and they're connected into finance networks across Australia, and they do their job well in terms of engaging with thought leaders, influencers, whatever you want to call them in these spaces, but they always do it with the eye of cynicism, which I expect all good journalists to have.
Keep the bastards honest, Phil. That's what it's all about.
There you go. So let's just use that as a bit of a brief to sculpt our conversation today. What do you reckon?
Keeping the bastards honest.
I'd
Keep
say
you guys honest, I reckon.
Yeah, well, we play a role holding each other to account as well. That's what newsrooms are all about.
That's true.
Yeah. How do you guys get on? Just as an aside,
We can't stand each other.
I know that.
We take it out on the tennis court pretty regularly.
Personally, how do we get on?
No. You can let me finish.
That's not good. That's not
Your
good chat.
journo's always butting in. No.
Yeah.
So you essentially, mortgages here in Momentum Media,
Yeah.
your wealth. So mortgages, everyone knows what mortgages, our listeners. Wealth is like financial advice.
Superannuation, funds management.
So the sector which pretty much feeds our retirement or wealth creation from a not investing in property perspective.
That's
You do a
right.
bit of it, but so that's the balance, right?
Yeah.
So how do you guys work together then to ensure that you've got your respective markets that you look after? There's a lot of commonality across it as well. Do you sort of meet up and just talk crap?
Yeah, we do. I mean, we catch up once a week just in terms of what's going on, but it's there's not as much crossover as you'd think. I mean, there's two completely different licensing regimes between financial advice and mortgage broking. But in terms of the people who are the product providers, the banks and then that sort of stuff, there's a lot of crossover in terms of what the banks are doing. I guess
Amateur.
Look at that. to take your phone call here.
It's actually a buyer's agent.
Oh, is it?
Yeah. Could be a new
Put
deal.
him on the line.
Quick.
Put him on the line. It's a new talkback segment.
Talkback radio.
Yeah. Alan Jones at your heart out.
There we go.
No, I mean, in terms of what our readers are mortgage brokers, so they're a distribution channel, and with Alex, it's a similar thing. He's got for financial advisors as his thing. So, but in terms of product providers, there is crossover there. Yeah.
Look, I think we could write the same stuff every day, and it would be of some relevance to our audience, but it depends what your style of media is. And as you know, Phil, since you kind of set the strategy, we're all about niche publishing. So even for financial advisors, we've got 6 different publications here, depending on their specialization, depending on, their geography, depending on all these different factors, right? Because we believe that the reason that the Sydney Morning Herald failed is because you can't, they've got a lot of readers, but you don't know who they are.
Has failed or is failing?
Well, it's not what it was, and I don't read it.
Mate, newspapers are the backbone of a democracy.
Yeah, I
We
don't
need
know.
them, don't we?
I don't know. You don't need them. No, you don't need them. It's just a medium. What you need are people who are helping the general public form their own opinions about what's going on out there.
Okay. And that's our job then, is it?
Well, that's our job, and others. But yeah, our job is to ensure that people are informed. And also, I think more importantly, and this is where media is going, help them decide what they believe in, to challenge them to come up with their own ideas. And that's why I think a media heading in a more opinionated direction, and podcast obviously is a big part of that, I think is very healthy.
Are you opinionated?
Look, I'm just a vehicle, just a vehicle for the truth, Phil.
Really? Is that what it is?
Uh-huh.
But by the way, Alex just launched a book called G'day USA. Reluctantly,
G'day.
USA G'day. I couldn't go down to the launch, which I do apologise. I had some other
Not at all,
pressing things on. But Alex spent some time in the run up to the most recent presidential election, where Donald Trump was elected, and he's had some observations on what he saw and what his thoughts were, and Where is it available? In all good bookshops?
Amazon,
I'm gonna give
yeah,
you a plug.
usagaday.com.
Okay, that's enough. That's all you
can
get.
follow it from there to Amazon. Thanks for allowing me the plug.
Nice.
There you go. But we talk about opinion, right? So
Sure.
Podcasters, journos, we've been in this game long enough to be able to be aggregators and curators of information, and because of that, we can apply our thoughts or sentiments towards something. And that's what I do in this podcast, what you do in your respective
But you can only do it, I think, in this day and age if you're connected to that audience. You
Yeah,
need
that's
to know
right.
them and you need to feel them. And it's not enough simply to provide information. You need to be an advocate on their behalf. And that's what so much of the media is not anymore. And if you look at the American election, one of my main conclusions in the book was that the media got it wrong, not because they didn't have any research in front of them, but because most of them live in Washington, D.C. and New York. They haven't been in a shopping mall in 30 years. They've never met a real American or been around one, right? So, and it's very similar things that happen here with our media space. So I think that's one of our points of difference, whether it's your property investment audience, which, you're clearly a part of that community. You have a lot of personal relationships there. And it's the same for me and James in our respective audiences. We don't see ourselves as providers of objective information. We see ourselves as players and as advocates.
Yeah.
And that's our role in today's modern media environment. I think we do it
so.
pretty well.
I think so. I mean, back in the day, journalists used to get out in the field. They'd be talking to the man on the street and getting his story and sort of using that, perspective to tell stories about broader themes which are playing out. Now it's a lot of the stuff we see. It's either a prime minister or a CEO, and that's basically it. And so that's the lens we're seeing the world through when we see financial media now. In terms of what we do, by getting the stories of the brokers, the financial planners, those types of businesses, and also all the events that we do. And Alex and I get out on the road a lot and go and meet people in the industry from all across Australia. It's really, really important because that's where that's the reality. People can set policy and can set agendas and have all that sort of stuff, but it's the people in the field who really have the real stories.
Absolutely. I mean, if you spend all your time on Collins Street or Circular Quay, you're not going to know anything about the actual financial system, right? Because you're only talking to the owners of the system. You're not talking to the consumers, and I think that's where that's where you really need to have that heartbeat.
And speaking of the owners of the system, when we last got together, go and have a listen to it. It's the 3rd of November. We spoke a little bit about, Alex, by memory, product manufacturing, product distribution, vertical integration, conflicts within the financial system. And I think we did a reasonable sort of job on trying to articulate to our listeners, and some of our listeners are very mature investors. They've been around a long time. They're quite sophisticated. Some people
certainly understand banks.
They understand banks, right? So we spoke a lot about that. So go and tune in on it. I think you'll enjoy the conversation because we got into the insights, the conflicts between advice and product. So making sure that the product you're choosing for whatever financial mechanism you're choosing, whether it's debt or investment, is right for you, right for your circumstances, not right for the person who's selling it for you. Yep. It's that way in wealth. It's that way in mortgages, many ways, and in terms of asset selection of property as well. So be careful who you're getting your advice from. So I don't really want to go into that today because we did a lot of that on the 3rd of November. What I want to have a chat to you guys today about is just the state of the play of the market. So there's quite a few things happening and things being readjustments within the government in terms of their approach to legislating investments and financial instruments. There's a lot of heat right now on banks and some of their behaviour around the delivery of financial advice and financial products. We're talking about this Royal Commission. Alex, mate, can you fill us in on what this Royal Commission thing is and how it might sort of impact our listeners, or what they should be thinking about as they see this stuff coming through?
I mean, it is a really big deal that we're having a Royal Commission into, arguably the foremost important companies in the country. They're a huge proportion of the Australian Securities Exchange. All Australians in some way or form, or the vast majority of Australians, interact with or are customers of those 4 banks, and so it is major that we're having an inquiry of this kind. And the basis for a Royal Commission under law is meant to be systemic illegality, right? So basically real criminal stuff. And historically, governments, particularly coalition governments, have said, no, you don't really quite need something of that sort of scale. We've had 40-something inquiries in the last 10, 15 years into the financial system in various kinds, including a widespread financial system inquiry only a couple of years ago, which former Commonwealth Bank CEO David Murray ran. But all of these as far as the advocates of a Royal Commission have failed to really get to a lot of the root causes. I mean, we haven't seen any senior executives, prosecuted. We haven't seen anything of that kind. What we've seen is a lot of focus around distribution, right? You've seen some bank managers get busted, go to jail. You've seen some mortgage brokers get busted. But really, I think what a Royal Commission can do is it takes the inquiry out of the hands of government. Government can't just appoint, its mates to run the show. It's not a political act. It's separate. It's run by a former High Court Justice, Ken Hayne, who's a really respected guy. Importantly, it has prosecutorial powers. So basically, it's got some guts to it.
So is it a witch hunt, this thing, or is it a genuine look at the banking system and how, whether it's okay, number one, number two, if it's not, how does it get
Look,
improved?
I mean, I think you could definitely see it as a witch hunt, and no doubt the banks have been trying to portray it as that until now, although now they kind of realise that they've lost the public on this and they need to play ball. But I think there are some genuine witches, right? And I think that we do need to look higher up the scale, because Australians have been ripped off in a lot of senses. I mean, we're not talking about just a few dodgy practices here. I mean, we're talking about money laundering. Like, it's nasty mafioso type stuff.
So what are they looking at then as part of the Royal Commission? So this isn't just
not just
ex-bankers
banks.
giving
No,
inappropriate
it's not-
advice.
yeah,
it's
it's-
much bigger than this.
It's the rot in the system which David Murray's inquiry didn't quite get to, and it's banking, superannuation, and financial services. And so, from my perspective, I do think it's warranted. I can understand why. It's expensive. It's $75 million. It's going to cost the taxpayer, and hopefully you end up with a good result. But I think there does need to be some meaningful change. Having said that, all this stuff is politics, right? I mean, from my perspective, and I write about banks all day, just as James does, the only thing that's going to make the big four banks behave better from the perspective of consumers is more competition. It's all about that business, and the fact that we've got this 4 pillars policy, which basically means that they don't really need to compete. And they don't really compete. I mean, they've all got a captive audience. Very few Australians change bank accounts, despite the level of service that they do or don't receive. So I think the only thing that is going to really shake them up is if we see, more banks, and in the mortgage space, James, correct me if I'm wrong, but the rise of non-bank lenders and Aussie Home Loans and Wizard Home Loans in the broking space over the years, that was a really positive thing.
Yeah.
That hasn't happened to the same extent on the retail side. In terms of retail banking, and it's starting to happen on the wealth management side and the superannuation side as well. So I think competition is the answer, but that's a lot harder to happen because it's expensive to run a bank and to start a bank. So in lieu of that, I think a commission, and you've got to think about the people who've been aggrieved, right? There's a lot of people out there who've been ripped off, who haven't really feel like they've had a sense of justice, and maybe this will give it to them.
And James, what do you see as the best case outcome from a Royal Commission, and what is the worst case outcome from a Royal Commission?
I mean, I guess like Alex said, best outcome. To be honest, I don't feel too hopeful about it, because I've just seen inquiries come and go, and whether it's the Royal Commission or something else. I mean, a Royal Commission, like Alex said, has that prosecutorial element to it, so it's a lot more serious than just an inquiry where facts get shared and a report comes out and then we move on to the next thing. I mean, the major banks just have so much power in this country, and power over government to.
But to be fair, the major banks saw us through the global financial crisis.
Yeah.
But did they though? I mean,
Yeah.
they what saw us through the financial crisis was Chinese buying our bauxite and iron ore.
There was a few factors. I mean, it's
Strong banking system, though.
Strong banking
Helps us.
system
Yeah.
is essential, but it's also the scare tactic the banks can use to say, hey, don't regulate us, don't change our situation. So there's no doubt. I mean, Australia has one of the best banking systems in the world, but it just needs a little bit more competition to it.
The thing is, things are already starting to change, I mean, the Royal Commission will go on, but, markets will continue to perform, and innovation will continue to come into play. So there's been some interesting stuff which is happening. If you set the Royal Commission to one side, the regulation, and I guess Royal Commission comes into that, but regulation has been the big theme of 2017, huge regulation in a mortgage space, all that sort of stuff, and that's been playing out for probably a few years now, and we, it's been spoken about many times on this show and on our own podcast, Elite Broker, as well, about what APRA has done in the mortgage lending and how that's made it a lot harder now to get money from banks. So the non-bank lenders have seen that as an opportunity, but you've also got some really smart third-party operators and mortgage brokers, mortgage managers, the same sort of innovation we saw in the early 90s where we had those, big interest rates, and people came in and said we can charge half the rate and still make money and save,
the birth of your Aussies,
the birth of your Aussies and your Wizards and all that sort of stuff. That stuff coming around full circle now with the advent of technology and things like blockchain solutions and all that sort of stuff, and algorithmic credit decisioning, and also foreign capital. I mean, Australia's always relied on foreign capital, but now you've got groups. For example, I know of a Sydney-based mortgage brokerage which is going to be launching a white label offering, not relying on major bank funding. They're relying on overseas funding, and they're using an algorithm to do the risk-based pricing, and they'll be able to offer something vastly more competitive than what the majors can.
So it's the new evolution.
It's a new evolution of mortgage management or mortgage brokerage.
So I want to just stop there because I want to have a good chat
Yeah.
in about 5 minutes' time around the influence or the extent of international financing in the Australian marketplace and the flow of investment, particularly property investment. But sort of just sticking on the Royal Commission quickly, Alex. So I'm a property investor. Our listeners are property investors. Some have large portfolios, some have small portfolios. What does this mean to me? Does it matter?
Yeah, I mean, it probably means that because of the next year of 12, the next 12 months of negative headlines about the banks, you can probably get a more favourable deal from whoever you're dealing with, and you should be trying to turn it to your advantage. I mean, the reason they're in this situation is because the government and the general public believes that they've gotten a fairly raw deal from companies that are as profitable as they are. And we're talking about, 1 month, the largest bank in Australia is getting hurled up by AUSTRAC, the anti-money laundering and counter-terrorism authority, for potential money laundering. 2 months later, it's recording the largest profit in its history, right? So they're doing very well, but there's a mismatch to the level of service that people feel. So in terms of an investor, I would say turn that to your advantage. I mean, they know that they're on the nose right now.
Yeah.
And they need to fix it by giving people better rates and better service.
So in terms of mortgages, most investors, myself included, are aggrieved by the fact that our cash rate is, what is it at the moment, 2.5?
No, 1.5.
1.5, sorry, hasn't moved in ages.
18 months hasn't moved.
And as an investor, I'm paying 5.2% interest only on my mortgages. If I'm doing sort of principal and interest, you can get really high 3s or 4s, right? So there's a big gap between the cash rate and what you're paying in interest rate. And banks will tell you that it's the cost of funds, it's margin, that's where their profit comes from, right?
Yeah.
So,
and to be fair, their profit is important. I mean, we're all invested in the banks in our super, which is something that a lot of people don't realise.
Everyone's sort of on both sides of the fence, right? But from a mortgage perspective, people sit there and thinking, I'm getting gouged on my rate. So you can go rate shopping elsewhere, non-bank lenders, second-tier lenders, whoever. But is most of the aggrievement with the Royal Commission around mortgages, or is it around the delivery of?
I think the biggest thing,
it's about executive accountability more than anything. I think.
Yeah, I think so. I think
who've just chased big bonuses,
and senior people have not been done. Only people down on the bottom end of the chain have been done, and people just think that's unfair.
And culture as well.
But I think less than the inquiry will focus less on mortgages and more on superannuation.
Yeah.
And super is something that is very poorly understood by the general public. It's not taught well in schools, and it's something that I didn't truly understand, before I wrote about it for a living. I mean, they're the two policies that Paul Keating brought in, and both of them sound like they're good in theory and everyone supported at the time, but in my view have caused most of the problems. The first is the 4 Pillars policy, which sounds like
so what is the 4 Pillars policy for our listeners?
So 4 Pillars policy means that the big 4 banks can't buy each other. So they're basically they have to, the ACCC, which is the competition regulator, will not allow them by law to buy each other, because at the time, in the 90s, they wanted to, ANZ, I think, wanted to buy NAB, or the other way around. I can't remember which one. And that was seen to be, a problem, because it would end up with more monopoly and less competition. Arguably, yes. So there's some sound logic into why you would regulate it. But in the result, what has happened is those 4 banks are simply just untouchable. They're protected by law. So they don't take the same sort of risk that a normal business takes. And it's the same with superannuation. By Paul Keating making it compulsory, it sounds great. Every employer in the country is forced by law to put in an extra 10%. People don't quite understand the fact that this is their money. And while it's good that people have retirement income and that they're automatically saving for it, the reality for the businesses that operate in that space is that they take no risk. It's there. It's a cash cow. It's mandated by law. They take no risk. They just feed off it. And it's money that doesn't belong to them. It's money that belongs to the people. So it's the same thing, right? I think as soon as you mandate and you have these, that's where crony capitalism comes from. And that's where you start getting all these leech industries who understand the system, and the consumer gets a raw deal.
I've been vocal, not this year really, but I remember when I got my superannuation.
And it was less than the year before.
It was absolutely ridiculous. The return I got on my money, and it's just it's a retail fund, and it's a subsidiary of a large bank which has a red logo. You work out who that is.
It's 50-50.
Yeah. I was livid. I got a 0.01% return on my money. Like I couldn't understand it. I was yelling and screaming from the rooftop saying, the CEO of this business should be sacked because he hasn't done his job.
And the reality is, look, it's hard to get a return through funds management, through active funds management, but don't charge the sort of fees that you're charging for active management in that case. The
fees are shocking. I brought up my super and I looked at the statement, and every couple of days there's a fee coming up for something.
It's not just the banks though. The industry funds are arguably even worse because these are meant to be not-for-profit funds, right? That people have signed up to by way of their union or by way of their the industry that they're a member of. Now these are meant to be not-for-profit funds, but every time you turn the rugby on or the AFL, depending on where you are around the country, you're seeing some sort of industry super fund marketing all over the country. Now, what benefit does it have to the members of a super fund simply for it to have more members?
All the execs are arriving in their Maseratis
there's no benefit. And they're also funding political campaigns of the Labor Party. There was a report just a few weeks ago that you can read about in our publications, IFA Investor Daily, that just blew the lid on how bad this was. I mean, millions and millions of dollars going from members' superannuation accounts to the Australian Labor Party and its political objectives. Now,
you love it, don't you, Alex?
I don't love it. But as I said, it's just as bad on the other side.
It's a racket.
It's just not about one party being worse than the other party. This is about the fact that superannuation is only meant to do one thing, and that's provide retirement income. And all of the bullshit around that is just no good. And that's what the Royal Commission will hopefully uncover.
So when we started this conversation, I said you're a cynical journalist.
I'm not a cynic. I'm just too close to it. I know how it actually works, unfortunately.
Right. So what do you do? So I'm a listener of the Smart Property Investment Show, and as a result, I'm therefore proactively investing in my education to be a better investor and take control of my financial future. That's the idea. So either I'm self-employed and I should be paying myself super. And if you're self-employed, you're not doing it, be careful because, you can you sent bankrupt by yourself not paying yourself.
You've got to have sympathy for that situation.
Yeah, absolutely. And then if you're a PAYG employer, you get 9.5% put into by your employer every month or every quarter into a fund, which is all your rights and obligations to manage and administer as however you like. So I can chuck it in a self-managed super fund and I can invest in property. I can do that. And a lot of people who listen to the show invest in property in a self-managed super fund, which is onerous and it's got its requirements and it can be a bit of a pain in the ass. But everyone should know what their super is doing.
Yeah, that's basically it.
There's no excuse not to know what your super is doing.
And what they're charging you and what you're getting. But again, the problem is, you need to have a proper functioning market where people are switching, where people are shopping around the way that you would shop around for shoes. And
you can do that with your super.
Of course you can do that, but the fact that they know that people don't allows them to get away with stuff that a shoe manufacturer would never get away with.
Anytime you've got a group of consumers who don't understand a market or what it does, and especially when you've got a legislative thing which says, 10 cents out of every dollar you earn goes to this thing which you don't understand, it's going to be a racket. It's going to be people there just screaming it.
So hold your super provider accountable.
That's right.
Yeah. And just get educated. That's why
educated.
That's why this financial literacy. I mean, it's funny, with financial literacy, people talk about it as if on various scales, but it's easy for us to talk about financial literacy and stuff because we're in this industry, we're covering it. So we're basically financially literate to a decent degree. But there are people, a lot of people in Australia who don't understand how to read a gas bill, for example, So you talk about
I got no idea how to read your gas bill.
Well, you talk about things like superannuation and stuff like that. It's just going to be a huge knowledge gap there.
Yeah.
And I think that's why I always thought financial literacy was a bit of a fluffy thing. It's not a great news angle for me as a journalist. It's not that exciting, but I'm increasingly finding it's so important. For reasons
Well, I
like
think-
Alex just discussed.
I think getting informed, but I think from an external point of view, and you touched on it earlier, James, one of the things that is happening that I think is going to make a real difference is this injection of foreign capital.
yeah, definitely.
Right? And so, because that's something that can make real competition. It's all well and good. I mean, one of the things they did last year was they made it easier for Australian companies to get a banking license. I think that's a positive thing.
Yeah.
But the reality is it's expensive to start any business in Australia, let alone start up a bank, although technology is making it possible. But the foreign capital entering in. Now, I know, Phil, that for your audience, this is a very, sort of controversial subject, right? Because property owners and even home buyers across the country are seeing foreign capital come in, and it can be a potentially negative thing, or, it certainly doesn't make things easier. But when it comes to the world of big business, I think foreign capital coming in is a really good thing, and private equity in particular. I remember when I was on Wall Street, I'd have conversations with people, big banks or investment banks or fund managers, and I'd say, what would it take for you guys to enter the Australian market? And they'd all say the same thing. They go, well, do those 4 banks still run your country? And As say, yes, but it's starting to change potentially. And they say, well, as soon as that changes, we're there. Because they see Australia as a really lucrative market. They see it as a somewhere where they can, very safely domicile, and it gives them access to the Asia Pacific. They want to get their hands on that cash cow of super as well. But with more players that are well capitalized coming in, that just has a direct impact on fees, has a direct impact on the consumer outcome. So I'm pretty excited about that.
Yeah, me too.
Thanks for the segue into this, Alex. There's 2 things we're talking about here. Number one is people buying Australian property, and then the other thing is that large foreign international investment banks or other fund houses seeing Australia as a source for them to distribute money and make an earn off it.
Yeah.
So 2 things working. So let's
provide services.
provide
and products,
service. So the first thing is foreign buyers buying up Australian property, and there's obviously legislation around this.
What's your view on that stuff, Phil? If I could throw a question back at you, I know it's your show.
Mate, market is the market. You know, we're in Asia here in Australia, and I don't know if you guys tuned into it. I did a really good podcast with Bernard Salt about a month or so ago, and he talks about the Dubai effect, and you might remember this. He was chatting one of our things once, where the Dubai effect being Dubai is this hotspot of investment. It's a nice, safe enclave in an area of disruption. So you have obviously, if you look at Afghanistan, Pakistan, Saudi Arabia, Kuwait, Egypt, around this whole area is a lot of tension, a lot of conflict. So people are tipping money into Dubai as a nice, safe place to park their cash. It's got a strong, stable government. It's open for investment. It's open for development, all the great things. So what Bernard Sol talks about is that Australia, primarily Sydney and Melbourne, are the Dubai effect. The same thing's happening in Asia. Very similar dynamics. So
Interesting.
there is good reasons why there's a lot of foreign money coming in property investment in Australia. Is because it's a nice, safe place to park your cash. To grow an economy, strong, stable government. Some could argue we've had about 18 million prime ministers in the last sort of 4 or 5 years. But it's a good place to park your cash. So that is the market.
I think it's some of it's a bit worrisome, though. I mean, all this stuff with, I don't know if your readers have been following Senator Sam Dastyari, basically resigning because of his closeness to the Chinese regime. And I do worry that some of this, property investment in Australia is all about, having a greater influence by what is still a communist regime at the end of the day. It might be one of our best clients as a country, but it gives them a lot of influence. It's particularly the sale of agricultural land. I agree with you. I mean, I think an open market is an open market, but I understand why people are worried. It's
very
about
emotive,
this sort of
but
thing.
it's not this time. We've had it ever since Australia was founded. These inverted commas, foreign people coming in and taking up bits which is expected is not rightfully theirs, and I think that's just
But Aussies used to be able to outbid them every now and then.
Yeah, but
It's getting rougher.
markets ebb and flow. It's like that right now, and it's calmed down a lot. You mentioned beforehand, James, how APRA and regulatory bodies have tried to slow down investment lending in Australia, and therefore soften the market a little bit, slow the market down. legislation around foreign investment is still there. You
Yeah.
know? As long as the money coming into it is not dirty money,
Yeah.
I've got a problem with that. It needs to be good, clean money. You know,
And some of it is. I mean,
Some
I
of
think
it
there's
is.
a
A lot
new
of it is.
report from the OECD.
That's right.
Just out today, I think, that recently that said, you know, there is a risk in Australia of dirty money, of what do they call it, corruptly obtained
Yeah.
funds,
Using-
and it's specifically coming into real estate.
Using real estate to launder money.
but you think about it, right? And going back to my chat with Bernard Sultan, go and check it out. You know, he talks about the population growth of Australia as a nation, primarily our major capital cities. It's going to accelerate and continue to accelerate in the years ahead. You know, there's going to be a lot more people living here.
Yeah.
And as a result of it, foreign money coming in is stimulating construction investment.
That's the reality.
Great for building, great for construction, and everything adjacent to that. Mortgage lenders, everyone benefits from a growing nation.
Yeah, that's right.
Everyone benefits from it, as long it is fair, competitive playing field for people to secure property.
Yeah.
And it goes back to also the expectation, and I spoke about it the other day on the podcast. The expectation of millennials. You guys millennials?
Yeah, we just
I
scrape
guess
in.
so.
You just got to scrape in. You know that your first property is going to be a $1.5 million house in Newtown.
Yeah.
Come on.
Yeah.
You know.
I don't know if that is the expectation. I mean,
No,
it's,
I think
If you
I think
read
it's the
if you
expectation
read
of
the Daily
majority
Mail,
of
if you read the
our
Daily Mail and like the Telegraph and stuff, absolutely it's the
I
expectation.
mean, what was that front page a few months back, and they had a picture of a typical millennial and the headline, and the Herald was editorially backing this young individual, and the headline was, "How are we meant to compete against people with savings?" That's the mindset. Like,
Yeah,
the
well,
world is
yeah,
evil.
that's
I shouldn't
crazy.
have to save. Someone should buy me a house.
Yeah, that's
I know that
madness.
your listeners, or our listeners, obviously find that ridiculous since
Yeah, I
they've
think-
gone through the sacrifice of actually saving.
I think that's crazy. I mean, in terms of whether it's the foreign investment thing or affordability or whatever, I think you just got to get down to reality. You know, there's a huge amount of people in the world. There's finite resources. Whether people are buying agricultural land to secure their food sources for their own country, or they're buying up property and land, or what, you know. Not everyone on this planet will be able to afford a home. Not everyone in
Particularly
this
not a home
country.
that has a view of Sydney Harbour,
No,
right? I
definitely
mean,
not.
it's one of the most beautiful places on earth.
Yeah,
It's expensive
exactly.
for a reason.
You know, I mean, I think having any sort of belief that you're owed something other than the air that you're breathing is ridiculous. But I don't.
So work hard, but look.
Yeah, you exactly. You just got to work hard and sacrifice.
You can invest in investment property for $200,000. You
Yeah,
find some great assets. For, you know.
Exactly. Well, people always come up with these, you know, affordability reports, and it takes 7 years to save up to buy a property here. So what? When was it ever a year? You know, I find it really frustrating.
Yeah,
But people think that
I think that's the underlying part of this whole housing.
You send hate
affordability
mail
thing, isn't it?
to James Mitchell.
Yeah, I just don't get it. You know what I mean?
Yeah. James wants to hoard all the houses.
I get it. I get it.
Portfolio's
But
looking pretty
let's just
good.
shift away from foreigners buying up Aussie property to foreign financial institutions buying the Australian market. I think you did a report this week about some Wall Street outfit just bought a big
Blackstone.
chunk of Latrobe or something or other.
Yeah, 80% of Latrobe. So
okay.
Blackstone's a massive group.
Yeah.
So they bought 80% of Latrobe, and then
So Latrobe is a non-bank lender.
Latrobe Financial's a non-bank lender. They also have a mortgage fund, so they do stuff in the
And a
wealth
super
space
fund. Yeah.
and a super fund as well. So and Latrobe's a really smart operator, and they've played traditionally in fact with their mortgage products, they do investment, owner-occupied, vanilla loans. They're quite innovative. They do a parent-to-child loan for the intergenerational transfer. And they also do non-conforming. And then we also saw earlier in the year KKR, which is another American-based firm, buy Pepper. So what's happening is you're getting these big American companies come in, and you know there's not much they can do with the banks because of the four pillars policy, like Alex was saying. But in terms of the non-bank space, there's a big opportunity, and they've got a huge amount of capital. Here's someone who's already playing in the market, who's a great distributor, and I reckon there's going to be some really interesting innovation come out.
Absolutely, and I think it's huge that they're making this deal. Just in terms, from our perspective, I mean, it's our job to provide analysis on the market and what's going on. But for someone like KKR, who is one of the most successful private equity outfits in the United States, they don't make emotional deals.
Yeah.
They don't make deals based on political ideology. They make deals based on returns only. And for them to make a bet on the non-bank lending sector is telling. And it is part of that conversation that I was talking about, of them saying, the big four banks in Australia are under pressure and there's a gap in the market. And the KKR, by the way, has done the exact same thing on the financial advice wealth management side. They've funded a group called Focus Financial Partners, which I know we interview them a lot and have a lot to do with them. And they've got $1 billion war chest. They're going around Australia and just picking off independent financial advice practices.
As the vehicle to push their funds through?
No, not at all. They've got no funds management arm, just as private equity, because they're making a bet that these practices, these non-bank practices, are going to take off.
Yep.
And we've been saying the same thing for quite a long time on IFA magazine. So there is this kind of democratization that's kind of going on.
Yep.
The banks are going back to, as we said last time, to what they do best, and they're leaving these other parts, which is a good thing. You know?
I think it's also a telling sign. Obviously, not just that the non-banks is where the market's shifting now because the big banks are getting so regulated. So there'll be more. But the specialist lending, the slightly higher rates because of the non-conforming stuff, all that's going to be more in the fore. But also we're at the bottom of the rate cycle. You know what I mean? Rates are going to start ticking up from now. And so if you're a big, New York firm and you've bought a non-bank lender who's got a mortgage book of however many, $1 billion, and people are paying this rate, over the next few years, as those rates start to tick up, it's going to be increasingly profitable.
So good payday.
Very good payday.
But that said, property investors should be thinking about how they can benefit from this increased competition, shop around for rates.
Absolutely, shop around. And like I said, it'll bring in innovation, you know what I mean? They're not just going to buy this group and then they'll have the same product suite. There'll be money spent on bringing out new product lines and that sort of stuff. And this is where some of that risk-based pricing, like I was talking about, will start coming into the market. There'll be mortgage products in the next couple of years out which people wouldn't have seen before, which will be based on how you've paid off previous debt, all this sort of stuff, and it'll be calculated in a much smarter and new way.
Well, there we go.
It sounds exciting.
It does.
Yeah, but I think that is the conclusion, right? It's when you move to an open market, people think that financial services is some sort of capitalist free market haven. It's completely not. The whole thing is based on tied distribution, deals with government, mandated behavior. It's not an open market. It's moving in that direction, and an open market is a lot better for consumers if they're informed. So that they can put pressure on their providers and get a better outcome. And
I know you've always been very pro independent financial advice, and the platform that you lead, IFA, is very much that, independent financial advisors. So keep flying the flag. And James, I know from your perspective, obviously the major banks and secondary banks are great partners of the work that you guys do. Across the
and the non-banks
you
work,
well. and non-banks, but across the platforms that you work across, has always been very pro non-bank to try and get better choice in the hands of customers, and I think that's probably really relevant for our listeners.
Yeah, and pro-broker, of course.
Pro-broker, absolutely. And what are they? 50? There's a new report come out.
54% of the market.
54% of the market.
Yeah, which is
so
huge.
More people get home loans or investment loans through brokers than through mainstream banks. Whenever I've gone into a bank, which isn't very often, I never want to go to a bank branch. It's a nightmare.
Yeah. It's a pretty dismal experience.
Yeah, it is not good. All right, thanks guys. I think good fun. Now, let's do this next year. Try and 2018. Sorry, on a bit of a quarterly basis.
We'll have plenty to talk about.
Yeah. And you're my eyes and ears on the Royal Commission. You can come and do the Royal Commission report with Aleks Vickovich. I know you like put your name to things. So
lovely.
Yeah,
you'll be all over it.
James, thank you, mate.
Cheers, Phil.
Remember to check out smartpropertyinvestment.com.au if you're not yet subscribing to our morning market intelligence and news. Make sure that you're one of the first to know what's happening in property. smartpropertyinvestment.com.au/subscribe. We're on all the social channels. If that's the way you like to get your information, just search Smart Property HQ. You'll find us, follow us. Any questions for Alex, James, and myself about what we chatted about today or anything in general, editor at smartpropertyinvestment.com.au. The guys will respond, and if you want to come to the show, you're more than welcome. And last thing, please keep those reviews coming on iTunes. We're well up over a couple of hundred now, and my goal is to get to 300 in the next couple of months. So if you can help me out just by rating us 5 stars, I really appreciate it. And as I mentioned beforehand, it's just not me behind a microphone here talking. There's a big team here who are cultivating, producing the Smart Property Investment Show, and they do like your feedback, so please send it through. I'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.